David, this is a company that's following in the footsteps of other technology names trying to steer us away from an obsession over subscriber numbers, but the market very keen to glean what those numbers look like today before they stop reporting them. How significant do you think those subscriber numbers are as a company tries to push us towards this profitability model around tiered advertising?
It matters, and certainly in the short run. But again, in the long run, price, we love to follow companies that have pricing power. And this certainly does. Netflix certainly does. And then also in terms of expense control and free cash flow. They should do $1.5 billion or more in terms of free cash flow. And that's going to be growing. And so that's really, really important. And then also engagement. They want us to look at engagement. And it's remarkable that Netflix has been so consistent in terms of having around 8% of total TV consumption over the last year or two. And that's even with the competition that stayed relatively stable. And they're going to want to be pushing that. And again, with Squid Games 2, with Tyson, with the football games, 2 football games and Christmas, they really are in a good position to push that engagement.
Engagement matters when you have got advertisers on board, doesn't it, David? I want to just ask you about content, because it feels like we've gone through those heady days where companies from Netflix to Disney and beyond were splashing the cash on the best content, trying to build these businesses. But they do have new areas like live sport and, of course, gaming. So what does the content proposition look like to you? Well,
it's certainly broadening. But at the same time you're broadening, you're taking on more risk. What if gaming doesn't work as well? Hopefully on the advertising side with this content, they'll be able to continue to drive that up. But you are taking more risk and adding different types and layers of content as opposed to their core offering, which is certainly movies and TV shows, et cetera. Certainly sports is a great area. You can make a lot of money and drive a lot of engagement on sports. And so that's what they're banking on. Whether it's in terms of fights, whether it's in terms of football, that is what they are banking on. And certainly the proof's going to be in the numbers. And it's going to be, and you're going to see it a lot faster now in terms of the advertising as that ramps up. That is a direct tie into what user engagement is driving.
David, for a long time, many thought that competitors would just crowd it and start eating Netflix's lunch. But even as we've had a more disrupted consumer environment thanks to higher for longer interest rates, it feels as though Netflix has held its moat, it's held its own. Why do you think that is, and is that always going to be the case from here?
Content, certainly, and just scale. They have the scale. It was funny. I did a little survey yesterday in terms of our office, and you went from the gamut of 0 in terms of people who having streaming content in terms of the services they use to 9. I'm at 7, so I'm still working to not be a piker and get up to that 9 level. But even with 9, Netflix, and another question I asked was, if you had to drop somebody, who would you drop? And Netflix was one of the last ones anyone would drop. So it's that content, that importance, and people just get used to, whether it's a dollar here, a dollar there. That pricing sensitivity is just not that great for most people. Certainly at the lower end, there's a lot more churn. People do follow, month to month. But overall, that pricing sensitivity for that viewership, which is so important and content driven, which Netflix has, keeps them in the driver's seat.